Anshul Saigal joined just now. Let's connect with him. Let's talk markets. Nuresh is also ready. Nuresh, it's a okay sort of a day, but is it largely because of FNO expiry?
Long weekend and hardly any volume action across the markets. So we are still stuck in this band. We are yet to see momentum, although we are not seeing the breadth weakening or seeing selling pressure. So any breakdowns also has not seen follow-up selling pressure. So for now, we are stuck in a range. And maybe next week we again take a fresh view in terms of momentum. But for now, the same range, 20 to 200, 300, 20 to 800 on the upside.
अंशुल भाई कैसे हो? हैप्पी होली.
हैप्पी होली निकुंज भाई, बहुत बढ़िया. Time to rejoice.
Time to
rejoice, be happy.
Okay, now that's a spiritual and that's a fundamental part which we all need to focus on. Always time to rejoice, time to be happy. But if you're in the market, there's nothing to be about, nothing to be happy about in last 3 months.
Warren Buffett makes a very interesting statement every time someone puts that question to him. He says that when you pay a very heavy price for a cheery consensus. What he means by that is that when everything is good, there is no uncertainty on the ground, the prices will show that. And when prices show that, I mean, we walk into a store where we are there to buy a shirt. And if the shirt is full price, we are not happy. We are happy when the shirt is half its price. The same thing happens in the markets and we are unhappy. So, that dichotomy is human psychology, really. It is really a time to rejoice for the discerning investor because prices have come off meaningfully. 6 months back, I wasn't happy because I didn't know what to do. There were no opportunities that one could say that these are cinches, that they are table thumping opportunities. Just go ahead and buy, put all your money in that opportunity and you'll make money. I find such opportunities today. And which is why I say that this is a time to rejoice.
Interesting that you say that, Anshul. Hi, afternoon. So where are those table thumping opportunities that you're identifying right now?
Afternoon, Aisha. Always a pleasure. Across the board. Of course, you could well say that banks prior to this correction were already cheap by virtue of prices having gone nowhere. In many instances, prices having corrected while the markets kept going up. Banks have become even cheaper. And that I can tell you that you can throw a dart, pick a bank which is trading at between 5 and 10 times earnings. Banks which used to trade at 4, 5 times price to book, today trade at under 2 times price to book. This sort of pricing is something that in hindsight, a year from now will look like quite an opportunity. But just that at this time, people are wary of investing, so they're not looking at this space. Aside from this, capital goods companies, I recall one company, one hot company, which everybody wanted to be in it, had rallied as much as 2.5, 3 times in the last year, is down 60%. Business hasn't been impaired. That company, today no one wants to look at because the environment is like that. We feel that that is where there is opportunity. Look at even defense. In defense, from a net importer, this country is going to be a net exporter in the next few years. Not a net exporter, but definitely a large exporter. And also within the country, indigenization has taken place meaningfully. Of course, prices were quite unattractive 6 months back. Prices have become attractive today. I find opportunity across the board, and there are ample opportunities to thump the desk and say that this stock can be 2x to 3x in the next 3 years. I don't know what the frequency of volatility will be in the next 3 months or 6 months, but the magnitude of upside in the next 3 years allows me to bear that volatility as a cost.
You spoke about 2 stocks I distinctly remember on the budget day. One was TIPS and the other one I think was Global Spirits. Do you still like those stocks?
You could find no reason not to like them. You look at their results. The results were for the third quarter very strong, particularly for TIPS Industries. They reiterated their guidance. Now, these are, and the guidance again is very strong. And here, I mean, this is just a case in point. I'm not referring to this company as a buying or a selling opportunity, but just as a case study. Here is a case study where the stock has corrected 30% on strong numbers, on guidance which has been reiterated. A company that does 350% ROIC and cash, which gives away most of its cash as dividend to shareholders. And because of the volatility, the stock is corrected. I see no reason why this company cannot be, if everything goes right, that is, that it cannot be much higher than where it trades today. Even on the other name that you took, I mean, they have a very attractive alcohol consumer business, which trades at nearly 100% ROCE. Now, that kind of an ROCE on scale, as much as 1,000 crore revenues, is quite rare in the Indian alcohol beverages space. And if you were to compare it to some of the peers, they trade at significantly premium valuations as compared to this company. It is a question of time when the market realizes that this valuation doesn't, I mean, this company doesn't deserve this valuation. And we anticipate that valuations will expand. The question is whether I have the patience to wait for that time or I don't. Do I get carried away by the frequency of volatility, or do I focus on the magnitude of upside? That determines whether I will stay invested, make money, or I won't.
You've been tracking the Alcobev charts as well, right? And you've always liked a USL, a Radico more importantly. What about Global Spirits? We don't track this one often.
Yeah, I think Global Spirits also, I think I remember in 2020, 2021 or 22 phase, there was a time when the stock had done, I think, almost 10x, if I'm not wrong, from 150, 170 levels, thereabouts towards 1500 or 1700 plus mark. That was the high for the stock in 21, 22 for Global Spirits. But post that, I think the stock had actually gone to a time-wise consolidation. And I see this as a natural phenomena because, you know, when stocks run up 10x in a very short span of time, they're bound to get into a time-wise consolidation. But the larger trend for these stocks, they generally tend to continue. We typically look out for a 30% to 40% retracement from the life highs for these stocks as a good point where these stocks find support for themselves. For example, from 1700 or 1500 levels thereabouts, the stock has found multiple supports at 750 to 800 mark. In fact, even currently the stock is placed almost closer to the 900 levels. And over the last 1 year, 2 years, the stock has been consolidating with the support of 800 plus thereabouts. So that itself indicates that the longer term charts is much more positive for the stock, and price wise I think it's at a very attractive juncture.
In conversation with our technical experts, and we want Anshul Saigal on board to talk about market fundamentals. What's looking interesting here is the bank nifty, which is popping right back up. Kunal, we were discussing this trade in the morning, sell IT, move to banks. Sell IT if you have, move to banks. Is that a logical and a sensible trade? Could it linger, or could it last for another couple of days, a couple of weeks?
Yeah, so the longevity is the most important part. Technically, yes, this could be an interesting trade where large cap IT stocks, mid cap IT names, they could start to underperform. They've already done it over the last 1.5 odd month. And I think more interestingly, till November, December 2024, the IT index, many of the IT stocks were actually perched at multi-year, multi-month highs for themselves, whether it's large cap names like TCS, Infosys, even the mid cap names like Coforge, etc. But then in the last 2 months is where you've seen the sell-off being a lot more aggravated. Now, when you generally see this kind of a sell-off, where an index gets into a correction of 20% in a span of the 2 or 3 months, we generally expect that this could be a multi-month, multi-quarter trend for that sector. Even though, of course, the first initial sell-off is quite hard, then the stocks consolidate, they go into a time-wise correction, but then the trend for these stocks still remains on the downside. I think a similar kind of a trend emerged for the IT stocks in 2021 end, 22 start, where I think from Jan 2022, many of these IT stocks in a matter of 2 or 3 months, they fell by 10-15%, and then post that we saw almost 1.5 odd year of underperformance for these for the IT index at large. I believe a very similar kind of a trend, maybe a bit shortened, not extending to the next 1.5 odd year, but I think potentially over the next 1 or 2 quarters, this could be a good trade where traders could look at switching from IT to banks.
Anshul, would you still be wary of IT, or do you think after this kind of hard fall that most IT stocks have had, it's time to buy once again?
Nisha, I'm in middle of the road in IT. I don't think that I would be overly bullish and going out and buying with this sort of a correction. Mainly because valuations even today are not reasonable, and secondly there is that overhang of AI and ML on companies in the Indian space. Now, if you look at these same companies prior to COVID, they used to trade at just under 20 times price to earnings. Many of them were mid double digits, meaning 15, 16 times price to earnings. Now, even after the recent correction, these companies trade at anywhere from 25 to as much as 40, 45 times price to earnings, depending on which company we are speaking about. Now, that for single digit earnings growth doesn't look like a very attractive valuation to me. Of course, if you are looking to hide and you're looking for defensive sectors, maybe this is one because at least cash flows are going to remain consistent. But in terms of making returns, absolute returns, and outsized returns, I think this sector leaves very little room on the upside. So I'm actually on the sidelines, and I don't think that unless you want to hide, this is the space to be in.
But I'll just put a framework here, Anshul, which is that let's look at IT sector, large companies. If I say 10% growth, then I'm extremely charitable. It is 6 to 8% growth. I'm assuming that dollar will linger where it is. It's not going to be going towards 90 more, which means that currency interplay which they get of 3-4%, that may not be guaranteed for next year. Third, these stocks are trading at P multiples which are anywhere between 15 to 25, something which you also mentioned. So why should one buy a sector where P multiples are 15 to 25, growth is 5 to 7%, and this entire fear of disruption will just keep everyone at the bay? I mean, with banks I can see clarity, with a lot of other sectors I can see clarity. When there is no clarity, when growth is not there, when P multiples are high, why knock on the door where I know there is uncertainty?
I couldn't agree with you more, Nikul Bhai. I think that I'm under no pressure to invest in one sector or one company, while I have the whole array of companies, more than 1,000 companies to look for, and there are ample long-term growth opportunities within the country. Now, let me give you an instance. In 2017, in our portfolios, we bought a company called APL Apollo Tubes. And at that time, the company had revenues of 4,000 crores. It had a 50% market share or 40% market share in the industry, which meant that the industry itself was 10,000 crores. Fast forward to 2024, and the company's revenues are 20,000 crores, means 5x. And the industry size is 40,000 crores, meaning 3x, 3 to 4x. Now, essentially, because the industry size itself exploded, this company being the leader in the sector actually gained disproportionately. And that also reflected in their valuation. Stock went up 10 times. Now, this is the play in India, that many a sector, by virtue of how the Indian consumer is positioned today, is going to be multiples of where it is today. Meaning a sector which has 2,000 crore of total sector size could well be 10,000 crores 3-4 years out. And as a result, growth in companies within that sector will be tremendous. If I'm getting that, why should I go out and look for companies which are offering 6-8% revenue growth and minor profitability growth, and my investment thesis banks on currency depreciation? That's not a space that I would like to be when I have so many opportunities which are so lucrative in the Indian markets, listed Indian markets.
Okay, that's the take coming in on IT, and well, pretty much in a void right now. Of course, if it's part of your core holding or core portfolio holding, that is, continue staying put with those names. DMart, that really is the story today, and that's really the eye-catching stock. Naresh, how's it looking at the charts at 3,800 thereabouts?
So it's taken a bounce from that 3,300 mark, which has been the low for the stock for the last almost 3 years, 2022, 2023, as well as in 2024, 25 now. So we've taken a bounce, but 4,100 has been a stiff resistance for the last 3 to 6 months. So I would expect over that area, there should be resistance and we again drift lower and be in this band. So closer to 4,000, 4,100, you want to be looking at the short trade. For current levels, there is no risk reward to trade on either side.
We come back last half an hour of trade for the day, for the week, and for the weekly expiry as well. But for the moment, I think it appears that we've slipped quite a bit from the day's high. The momentum, what we thought would come back in the second half of the trade, or which has come back in last 2 days when markets have started higher, they've gone lower and they've recovered in the last 10-15 minutes of trade. At least it appears that today that late hurrah seems to be clearly missing.